Welcome. This is the Trading Pit, your home for sophisticated takes on the crypto markets. It's May 23rd, and here in the studio is JJ and Benjamin of JLabs. I am your host, Marconi White. Man, all eyes are on the SEC today as it prepares to deliver a verdict on the first of 8 ETH ETFs. And I'm asking if ETH is still the play or if investors and traders need to move further down the risk curve to get that juicy profit. But first, and most important, it's rapid fire, where I look for simple answers to complex questions, get you guys revved up for this hot show. Benjamin, I'm going to kick it off to you. Michael Saylor is on record many times as saying an ETH ETF was absolutely impossible. Do you think now that it potentially is going to be approved that he's going to pivot from Bitcoin to ETH?
No, I don't think so.
No?
It's a different beast.
Yeah, he's already all in.
Different beast.
So yeah. you can't change that too.
Yeah, and the way you can convince people about BTC, you can't convince them for ETH. It's a very different content.
Oh, we got a bear in the studio. We're gonna have to see what the audience thinks about that. JJ, is there a stock that can be the MicroStrategy of Ethereum?
If they're smart, yeah, I would say. I believe GameStop sold a bunch of shares at the market, like 1.5 billion. So if they were smart, or if I was on that board, I would be recommending that they quickly pivot and be the first to adopt something like that and drive up the meme coin value of it.
So the absolute degen stock of equities could come over to be the degen stock and connected to Ethereum, is what you're saying?
Smart. If they're smart. Eventually somebody's going to do something along those lines. You see it with MicroStrategy stock. Look how well it's worked over the past couple of years. So somebody's going to figure this out.
All right. It'll be interesting to see who emerges. Benjamin, if ETH is approved, are you buying more ETH or alts or staying in stables?
Nobody should be staying in stables right now that's for sure. Even before ETH ETF news came in, you're not supposed to stay in stables. We are above the 60K zone. But if someone were to buy in freshly, then it would be major allocation for ETH. And then let's say around 20-25% allocation for other altcoins.
Okay. All right. There we go. There's a breakdown you can consider. All right. Last one here. JJ, NVIDIA earnings released yesterday and quarterly revenue was 26 billion. Eye-watering. Is AI the real competitor for retail this bull cycle?
I don't know if it's a competitor. I would say it's more of like a rising tide lifts all boats sort of thing. So as we talked about, like that's kind of the first mover in terms of markets. So you see NVIDIA drive up the stock market, and then that encourages people playing in the stock market to go further down the risk curve, which drives up Bitcoin, which drives up Ethereum, etc. So I think it's good. I don't think it's necessarily a competitor. I think the more those stocks go up, the more everything else will go up as well.
No, rising tide lifts all boats. Let's hope you're right. I want to see it all happen. We all want to get insanely rich and move away into the sunset. Maybe we go to Dubai. We'll have to see. All right. Well, we're going to move on and talk a little bit about the Ethereum price action. As we mentioned, we've got the VanEck decision today expected from the SEC. I think the expectation is that decision is going to come out later in the day, perhaps closer to 4 p.m. Eastern Standard Time US, although obviously it could come out earlier. And then, unlike the Bitcoin ETF where decisions seem to be released for everything all at once, this less clear on exactly how this is going to happen. I think right now, though, the market appears to be expecting it. I want to unpack that price action, talk a little bit about what we've seen in terms of accumulation, and maybe how the market's positioning, look at some of the options, get a little bit of an inside perspective from Benjamin, from some of his colleagues that he's talking to on how bullish this could be, or if it's actually a sell the news event. So we're going to unpack that before we even get into the rest of the market update. Before we do that, I want to say welcome to Preet, Thomas, Bodil, Light Signatures, KS, Paul, Adrian, Tony. Welcome. So glad to have you guys here every Tuesday and Thursday rocking the live show. If you haven't already, hit the like, subscribe button, hit that notification bell, share this episode and share our show wherever you want to talk about crypto. I know some of you yesterday joined us for our AMA session in our brand new studio. I hope you enjoyed that. Let us know in the chat what you thought of that. It was a lot of fun. We're hoping to do a lot more of those, but definitely I want to say that was probably the highlight of the quarter for me. I'm assuming maybe the same for JJ as well. So JJ, I want to bring it back to you. I want to know what the market's looking at right now. It's easy to look at the price action as I stare at the price chart. Ethereum's currently sitting at about 3,800. It's got a 3% 24-hour gain, and over the last 7 days, it's up 28%. And yet we saw some news coming out this morning. Ben Lilly tweeted about the fact that, you know, when volatility is this high, when you're looking at the term structure, it often means that we're not going to see a spike in volatility. So is everyone just waiting for this news to come out and it's just going to fade as soon as it does?
It's starting to feel like that, right? And that we've already had such a massive move up. We basically undid 2 months plus worth of bearish choppy price action in 2 days, right? So typically when things make that kind of movement, price needs a bit of time to find a level and digest it a bit. However, I think what we saw on Monday is that the market really wasn't prepared for this at all. So you saw that rush demand, and then it was like a perfect storm. This is something we covered during our options AMA yesterday, was this gamma squeeze effect that took place on ETH on Monday. So as we see here, market makers were heavily short strikes between 3K and 3.5K. So once that rush demand came in for ETH, they had to hedge, had to buy more calls. And the effect that this has had on the term structure is really fascinating. So it's trading at almost 182 at the money IV for tomorrow's expiry, which is an insane implied move. I can't remember the last time I've seen ETH trade this high. It was probably back in 2021 or maybe after the FTX collapse. But this is an effect of people who were short call options being forced to hedge. So they have to buy shorter dated call options in case, hey, maybe this thing goes to 5,000 tomorrow. I need a hedge for my tail risk. So anytime you see that kind of effect take place in markets, it's more often than not at least a local top signal. So we're just gonna have to wait to see how this plays out. But it's like it's what I called on Twitter like Schrodinger's volatility, and where if the market is fully braced and prepared for volatility, typically you don't get that kind of reaction. So we'll have to see.
The insurance holds it back. Well, tell me, what were you looking at before when we were talking, speaking offline, about the fact that you said, you know, we haven't really seen massive amounts of accumulation for the better part of a year, I think, you know, and the odds of this happening this soon in May, I mean, August was considered maybe a higher likelihood event. All the news up until last week, or even this Monday, was, hey, this is not going to happen. If it does, perhaps in August. So have people been accumulating ETH in the hopes that the 5% chance was going to happen, or is the market just really under allocated?
If we look at our divergence chart here, we see that ETH has been pretty much net sold throughout 2023 and 2024. There's just been no accumulation patterns here since shortly after the merge. Last time we saw it was back in 2022 after the FTX collapse, and then it's just been a whole lot of selling from both whale wallets and smaller wallets since. So I think this is a good indicator of how underallocated the market was to ETH, and probably in large part why we saw such a rush demand for it once it became clear that, hey, there is going to actually be an ETF. Further adoption is likely coming. So you see everybody that had hated on ETH kind of rushed into position there. And I think that's due to how unloved it's been, and how it's interesting, right? In that we've seen basically everybody selling ETH when we on these wallets we track, yet the price didn't look all that bearish, right? It's not like it was trading below 2,000. It was still holding a bullish structure. So apparently there's somebody accumulating this one way or the other, and somebody's been holding the price up since 2023, and I think we've finally found out why on Monday. And now we see the market try to reposition itself in a rushed fashion. I think that can be a large contributor to the basically weekly candle we see forming here.
So you've seen selling. You haven't really seen strong accumulation for a long time, right? You're now seeing people
It's been a very hated asset, right? Like
very hated asset.
Ever since the merge, people were expecting this kind of price action after the merge in 2022, and that's another example of like Schrodinger's law in markets, right? If everybody's expecting something, it doesn't happen, and then it happens at the moment when you least expect it, which was Monday. So now you see everybody kind of piling back in, trying to reposition themselves for ETH outperformance.
Well, when you look at this go forward, so let's assume that, you know, play these different scenarios. But right now, I think the odds feel very high that we're going to get this ETF approved today. Does this become a sell the news event, or is everyone going to allocate in expecting that for the next 3 months as we see these ETFs? I think many of them are over the next couple of days, but they're the smaller ones. IBIT isn't until August, or rather BlackRock isn't until August, and that's kind of the King Kong in the room. What do you think maybe the market's reaction to this?
My gut feel on it would probably be an immediate sell the news event, or maybe it like wicks up, takes out a bunch of shorts, and then drops back down and finds a mid range around 35 to 36, and then we continue upwards, at least into the ETF listing, whenever that may come about, August or so. Probably be a bullish summer, but I think in the near term, there's just too many people chasing it. I think it's going to be, and you see that IV too as well. Typically, anytime you see that, that's a good signal that sell the news is coming one way or the other. But again, we saw this with Bitcoin in January, and where the at the money IV was extremely high, and then we had that spike up to, I think it was like 50K, and then we dropped back down to 40, right? So possibly something like that. Maybe we go up to like 4,200 on ETH, maybe breach past the yearly highs, and then drop back down the coming days and start to form a bullish structure from there.
That's definitely an interesting scenario, and everyone appears, as you said, the market is really offsides. This was very much underappreciated as an event that could happen. Benjamin, I want to bring you up here. We were also talking before the show. Your spidey senses were suggesting that you're not quite convinced that this is going to be quite as bullish as the market is now expecting. You've talked several times about. We've had it on the show, but I think also offline about almost hoping that we had more of time for Bitcoin to accumulate. And then even just before this show, we were asking the question, has the Bitcoin ETF been successful? Because if it hasn't been, what is that actually going to mean for ETF? And just to put some context into that, we were discussing the numbers before the show. If we take GBTC off the table, there's been about 33 billion in assets under management that have gone into these new ETFs. But then if you take the 17 billion that's come out of GBTC, perhaps rotate in, you're down to about 16 billion for a quarter and a half. And then, so you have that sort of in the background about the success of these ETFs. Then you have Jim Bianco doing an analysis saying, well, 85% of the ETF appears to be more coming from retail, only 3% being from institutions, and the rest of it really being about hedge funds, which you've also mentioned maybe is not necessarily the best structure. And then you've got a question about who's are the people that are going to be rushing into this ETF when it actually goes live. So break down a little bit more your thought process here. Are you on the fence? You talked about accumulating ETH if this does get approved. What's going through your head?
Okay, so for caveat, I'm not really bearish on the ETF approval. I do think it is good if it gets approved, certainly. And I do think people should already be holding ETH. There was no reason anyone should have rotated out of it in the past months. Like spot is not to be touched. It is just to be held. It's all about when it comes to day trading or lower time frames. It is not about spot trading at all. It is purely about leverage, whether it is futures or options. So when it comes to ETF-driven leverage play, I think we are at a risky spot right now because OI has gone up, funding has gone up, and obvious bearish divergences obviously exist. And like JJ said, IVs have gone up as well. So, and we went up like crazy, like from 3K to almost 4K. That's a lot for ETH. And ETH ETF confidence when it comes to May approval was what was lacking. So it was not about August approval. August there was much better odds, I would say, or more hope, because typically nothing good happens in summer. It's the kind of attitude TradeFi typically has. It's mostly a bit of a risk-off attitude that happens in the summer period. It's end of spring, summer period. So, and you always have the sell in May and go away model, right?
Mm-hmm.
Given a lot of these factors, I think what took the market by shock was that there is a potential for approval in May, which they did not expect. A lot of this move up, I believe, is an anticipation and expectation of the approval in May, and people did not expect that. And there's certainly an over allocation that is going on futures side because OA has got up like crazy, right? But
Yeah,
doesn't mean we are going to mean revert here.
Yeah,
doesn't mean we are going to mean revert here and go down.
I want to put some numbers there. So the Ethereum, when I'm looking up on Coin Analyze, when I look at the perpetuals futures volume for Ethereum for 24 hours is 41.2 billion. Bitcoin is at 31.7. So it's actually eclipsed it. Open interest right now is sitting at 12.3 billion for Ethereum. So it's to your point, it's absolutely shot up. And people, same thing from an options perspective, people have rushed back into the market.
On ETH too. So there's definitely a lot of short interest in where they're long ETH, short the perpetual futures against it. So it's a mixed bag. There's definitely people chasing as well on leverage. So beware, it is frothy.
Well, Benjamin, what's your take on the fact that, so if let's say we come out of the gate today, there's an approval again. Everyone, I think at this point is expecting that to be the case. What do you think this is a sell the news event, given some of the data that JJ was looking at, knowing that the actual ETF won't be going live for months, right? That's another.
I give it a bit more odds on sell the news event. I give it a bit more odds, higher odds on sell the news event. I don't see any reason why there is an additional. I don't see an additional reason that basically surprise people off and other hedge funds. Let's say the Millennium Fund Management, right? They were one of the largest accumulators. I think they accumulated around 2 billion or something in BTC ETFs. Like, I'm trying to see why they are going to be so surprised and shocked and come in and accumulate 2 billion worth of ETH right now. I don't see a reason. Yeah. It's definitely good, and I think it is going to open doors for a lot of other money to come in. But I think that comes in once ETF goes live. Right now, everyone who's going to probably try to front run it, I don't think it is going to be that much of an advantage. Because see, if you point it out to October to January rally, so there was a confidence, there was higher odds and increasing odds of a BTC approval. The drama was fantastic, and yeah, it was a different ball game, I would say. So front running over there was a different scenario, right? Because you still don't know if it will get approved or not. The odds are great, but it is a one-of-a-kind event that was happening. So trying to base the same thing as what happened with BTC and saying like, hey, now it's getting approved, it's our time, let's accumulate for another 4 months until it goes live in August, for example. I don't see a solid reasoning here.
So I want to finish off with one question though. Yeah. So sorry, finish this off. I've got a question for you, and then we're gonna move on to Bitcoin.
Sure. Overall, I think you have to still keep accumulating ETH below 4K, below 3K. There is no doubt at all. But that is for spot. And if you buy it, your goal is like 12K or 15K, probably within the next 18 months.
Ethereum or ETH? Ethereum or ETH?
Ethereum.
Ethereum. Okay, you're buying.
I don't trade ETH, so
okay.
I'm focusing on ETH. But that is what I would do. And the short-term 4 months action for spot holders is nothing to be discussed at all. They should not overthink about it. That's my opinion. Don't try to time that. Okay. But when it comes to futures, I think we are at a risky spot.
Okay, that's good perspective. Last question I want to ask before we move on. We were talking again before the show about the Me Too movement, and I know I don't mean what's happened in the last couple of years with people getting canceled and so forth. I mean this idea that now that Ethereum has been launched, you're already seeing discussions about Solana. Now the question is, when do the ETFs stop, right? For all these other digital assets of a certain size. What's the risk that it just goes on forever and it dilutes all the attention share?
I think it is not going to stop anytime soon. This is like a newfound toy for BlackRock. They're not going to leave it until they milk it as much as possible in terms of fees. And we've already seen a lot of data that on how well the demand for BTC ETFs in general, in terms of numbers compared to spot ETFs, how well they have actually performed compared to gold spot ETF historically in the past. And given all of that reasoning, and there's certainly going to be a flood of tourists into the ETH ETF as well. I don't see why not. But it's a question of, once again, will it overperform the flows that we saw with BTC? that still continues, right? Because BTC was never discussed about can it be a security or not. Whether Gensler continues or not, we're still discussing about whether it is a security. And if it is so, what would be the difficulties with DeFi? But when it comes to BTC, you don't see anyone discussing about anything about BRC20 or rules. I mean, on the TradeFi side or regulation side, all that they discuss is about how to handle the miners, how to handle taxation, those type of things. There's no issues about people owning BTC. But when it comes to ETH, it opens up a huge network, right? It's a country on its own. It's completely different, and you have so many businesses running inside that country. So there, the discussion is a very different discussion because you can issue tokens, you can have all these scam tokens, you have all these NFTs. There's so many things to be discussed on the regulatory side. So I don't think it is as straightforward as a BTC approval and a no-brainer investment for big funds, or let's say the funds who never invested into crypto, for them to come in and put in on ETH. It's going to be interesting how that turns out, to be honest.
Yeah. I agree. And I've looked at some of the information coming out of Asia, which I know is a different animal in terms of patterns. I'm not going to get into it today, only for the perspective. I think I need some additional analysis, but it'll be interesting to see as these ETFs come on board, to your point, who's actually buying them. What's the appetite for them? Is it as hot and heavy as everyone's expecting? Obviously, then we've got this other issue or potential price catalyst, which is, the amount of ETH that's already staked, which takes 30% off the table roughly, which could obviously squeeze price higher. But I think this is interesting perspective for now. Well, obviously, we'll be looking, all eyes are on the SEC to actually release their verdict on VanEck. And then obviously the rest of the ETFs, the assumption is that they would just kind of fall like dominoes. Everything else would be approved. And then obviously we'll have to see when it launches and how successful it is. But with that, let's move in to look at the rest of the market. I want to get a better sense on Bitcoin, which started the week rather hot and heavy, moving up from mid-60s to 70K. Now appears to be slightly under that when I was looking at the data just a little bit ago. And we have started to continue to see some ETF inflows. I think the latest that I saw yesterday was over over $100 million. But from a price structure perspective, we may just be sitting more in the crab walk. JJ, you talked about it on Tuesday, that we may start to see catalysts that could push us out perhaps higher. Has anything changed over the last 48 hours that would suggest you got a better sense of where this is going to go over the next couple of weeks?
No, it just seems like it's consolidating here at the previous all-time high. So it's actually trading below it now. We got a wick down this morning. It looks like Ethereum sucking some liquidity out of the room here on Bitcoin. And it's coming down, obviously taking out a lot of froth that we saw. There was a lot of people obviously chasing with futures positions once we got above the 70K mark again. It kind of seemed like, hey, we're going straight back to all-time highs. But it's the way the market works, is it chops around, right? So anytime people are sure of something, it comes down and it's going to make you question that belief. So we'll see. I think it's going to be pretty crucial for it to hold 67K if it gets back down there. Ideally, you'd want to see a bounce from somewhere between 68.5 to 67K or so in the coming days. So we'll see. I think it's dependent, obviously, on how this ETH ETF goes, because it's all kind of connected. So I think if that's ultimately bullish for ETH, we'll see that kind of reflexive pattern play out on Bitcoin as well. Or if there's a denial delay, we could see some additional froth washed out of the market here and get a deeper wick down, as obviously there's been a lot of leverage chasing over the couple days. Anytime Bitcoin and Ethereum move in such a volatile pattern, you're going to have that kind of snapback effect where it comes down and washes people out. However, if we look at the monthly chart here, this is looking pretty bullish. So we see we almost have a fully bullish engulfing candle here. And if it can ultimately close May above 72.7 or 73K or so, I think that's setting up for a pretty bullish June. So we're going to have to keep an eye on this, see how it ultimately resolves itself into the end of the month. But I mean, it's hard to paint this any other way than bullish long term, right? So this might be one of those times to just close your eyes in the near term, ignore the short term price action because it's going to be volatile. Let's see where we go.
We've talked about the idea of sell in May and go away. Benjamin's been the champion of that. I think his gut's still telling him to look at that. But what happens in that scenario where we actually close above that 72K at the end of May. It seems like we've got to be at our computers. No more beach time.
Yeah, I think June. I mean, we saw this last month or last year in June as well. Is that June was an exceptionally bullish month for Bitcoin? I believe it went from like 24K to over 30K throughout the month of June. Then we saw that really like summer doldrums effect in July and August as the market kind of consolidated a bit, fell into a distribution pattern, and ultimately came back down and retested that level in September. So I think that could be something we're setting up on. If obviously if May closes bullish enough, we get that kind of momentum heading into June. I think 80 to 90K could be a target, and then maybe we come back down and retest this range sometime in August or September.
Interesting. Benjamin, you are also posted some data on X that looks pretty bullish. This is a tweet, I think it was from a couple of days ago, but about the Hashribbon model as a bullish opportunity or bearish trap. I think it's got a good amount of interest on X about, are we setting up for actually a pretty hot impulsive move up? Do you want to unpack what that chart is and what it's telling us right now?
So Hashribbons is basically a model from Capriole, which uses a very simple SMA crossover and a short form and a long form moving average of hash rates, smoothed hash rates, to determine whether there is a slowdown in the Bitcoin network, in the demand, and together with the price. And if that is the case, is it bullish or bearish? So he has a few models which basically indicates, okay, now this is starting to indicate there is a capitulation type of a situation. It doesn't necessarily need to result in a huge drop. Often it can result in far more sideways. And that's because the network demand is also much lower. The hash rates are not rising as fast as they were for a significant period of time. So they're all trying to smoothen up a little bit, and it's like a take it slow type of a situation. Rather, don't take too high leverage risk. And we are heading into one such period, is what I could see based on data at least. Hash rates have calmed down a bit. Price has calmed down a bit. We've been pretty much on sideways for nearly 3 months now, if you think in the grand scheme of things, right? We are stuck in the 60K to 70K zone, approximately 72K zone, let's say. And what happens during this capitulation period, or when you see in this indicator the red zone, it's not great times for longs, of course. And in the past years, it has consistently performed well to show it is a bit of a risk of situation during those periods, or to not be overly bullish on things. Of course, it's not perfect, and because during the time of COVID, the month of COVID, and once COVID was over, and when price started rising up in Q4, the capitulation situation was still bullish, and price kept going up. So it's really situation specific, I would say. But I think we're not any different from the past couple of years situation. Let's say from 2021 to 23, we are in a very similar situation. The good thing is when this capitulation period ends, it turns into a buy signal. And those buy signals have been historically really strong HTF indicators to have a strong bullish uptrending market. So the good thing is we have this red period. Let's all breathe a little bit, accumulate. And when the time comes to show the buy signal, we should hope to be in a position already.
So does this let you sell in May and go away until that buy signal comes back?
I would, at the very least.
Well, I mean, I know you won't because
I
I know how much you enjoy being at the computer. But in general, could the other traders sell in May and go away?
I would deleverage on tokens that will have a high beta drawdown. So perhaps holding BTC is not the worst of scenarios, because if we look at BTC's drawdown in the past 18 months or so, it's never been more than 20-25%, right? From the top at any point. And quite recently, we already did a 25% drop, and we have started to recover, and we are sitting almost near the previous cycle's all-time high. So it's not really required that you sell your Bitcoin and go away. It's good if you can take some put options and keep it as protection. That is JJ's department to advise on.
Yes, that's right. That's
Maybe
right.
suggest on what type of put options to take. But what I would basically do is be a little bit wary of um, extremely volatile gambling tokens, like meme coins and all of those things. Like going into pump.fun and doing whatever I want. That's not the time. This is not the time, I
Sure.
would say. So unless we see strength in those type of sectors, it's not required that you allocate into those sectors during this period.
All right, waiting for that buy signal then later on, or waiting until we see some actual movement coming off of BTC to look to rotate to some of those other higher spec plays.
Yeah.
Okay. All right. Well, JJ, I want to come back to you. I want to just wrap up a little bit on the options side from a Bitcoin perspective, and then maybe we can look a little bit more at the Dixie before we talk a little bit more about positioning. This is an interesting time to really be getting into that on right before this ETF goes live. Before we do that, I do want to give a welcome to everyone who's in the chat. I see a few more that have joined. I see Josie, Hello World, Adrian, and Run the Jewels. Glad to see you guys here. Adrian says, I think it's sell and man go away except in a pre-election year. So perhaps there's a caveat here, a context that we all should take into consideration. Good point, Adrian. The election may throw everything into a loop. I think Ben mentioned one of the reasons we're seeing this ETF is because of some politics from the parties here in the United States trying to figure out how best to position themselves for November elections. Sad to say that's what's driving this, but such is life. JJ, let's go back and look a little bit at the options market. I think May has the big expiration. That's where we're really hanging our hat on. And then the rest of the year, obviously, the volumes seem to be going down. Are you seeing any movement starting to change in how the market is positioning itself, long, short, or just more insurance either way?
No, the big move this week, obviously, we had the large uptrend over the course of the past 10 days or so. And then we've really seen this sold down. So the market's taking advantage of the spike in volatility to sell additional volatility at premiums. And that's kind of the theme of things now. So until we really get that breakout above 72K or so, we're going to be in a low volatility environment as price chops around here on Bitcoin. You wouldn't see the IVs really start to spike until we make that move up above 72K and the market really starts to prepare for new all-time highs and kind of the parabolic break that tends to follow that. So for now, we've had that large move up, and now it's it seems like the options market has been positioning for just stagnation here, chop solidation, whatever you want to call it, where we're just kind of trading in range for at least the next couple of weeks, and then we'll see ultimately how this monthly closes and what June looks like forward. But for now, it seems like option sellers found the opportunity to sell additional volatility at higher premiums than they were getting just a week ago when Bitcoin was around 60K.
All right, so no real change there. I guess we'll have to see how the market starts to reposition itself going into June later in the month after we get through May.
Indeed.
Okay. All right. Well, I think unless there's something else to talk about options, it's time to move on to outside forces. Earlier this week, we were talking about Dixie and the fact that it could be raining a little bit on the parade unless it starts to weaken. It looks like it actually has. And JJ, we were talking before, again, offline, that it looks as though the structure continues to be bullish for risk assets. You want to unpack that?
It was, and then it's right back up again. So
okay. Things change in a moment of minutes, right? Matter of minutes.
So it's trying to get back above the resistance levels it lost. You see the 50-day MA, a few other moving averages here that really kind of determine its trend. So if it can get back above here and start to make a move above 105, it's going to be risk off. That's just kind of the nature of it. Is if it gets traction above there, markets, I think this was probably an exit rally if that's the case. And we start to see Dixie trade above 105 into the monthly close, it's not going to be a good signal. So this is kind of a pivotal point here, because if it does reject, obviously, as we pointed out here on the weekly chart, this is also a pivotal zone here, where if it goes further lower, if it breaks below 104, falls below 103, you could see it's kind of it opens up the floodgates to the downside, and that would obviously be very bullish for risk assets throughout the remainder of this year. But it seems like there's a lot hinging on how this plays out into the end of the month. So keep a close eye on that. We don't really have a clear read yet one way or the other, but As of right now, it's looking like it has some momentum, formed a bit of a lower high here on the weekly chart, and could possibly expand up to 107 and ultimately create that liquidity event that we've been hinting about for months, and it might finally come, unfortunately.
Yeah, and I was looking at the schedule this morning or last night about some of the events that could be a catalyst for to move that up and down. I haven't seen the numbers yet, but I believe there's jobless claims coming out this morning, new home sales as well, and then tomorrow's durable goods orders, as well as the University of Michigan Consumer Sentiment Index for May comes out. All of those, I think the market needs to digest, really continue to think about the inflation fight, as well as whether or not we're actually going to see some rate cuts on the table.
Mhm.
And that should be reflected in Dixie, right?
Yep, that's right.
Okay.
So we'll
All
see.
right.
The market will tell you, You'll
Yeah.
try to rush ahead of it.
Right. Yeah. So we see the bullish earnings coming out in NVIDIA, which continues to just absolutely dominate. At the same time, the market is still expecting to be bullish, being able to see some of those rate cuts and the Fed saying not so fast. They weren't that convinced. I think the minutes that came out were actually quite hawkish on their ability to actually fight inflation and the progress that they had made to date. So I think traders need to keep that in mind. I don't think this is a done deal in the near term.
Mhm. Yep, that's exactly right.
Okay.
So
All right.
we'll see
Well,
it from
let's
the Dixie. So if it makes that breakdown, that's kind of a risk on signal. Trending below 104, especially below 103. But right now, it's still in that. It's trying to make up its mind in terms of what direction it's headed.
Well, let's use this as an opportunity to transition, talk a little bit about positioning. I think everyone's aware now what the market's looking like in terms of excitement over ETH, continued range bound for Bitcoin, and still looking for some buy signals coming in for King Bitcoin. Before we do that, I do want to say to everyone out there, if you're looking for ways to get in and start trading a little bit like JJ, and as well as just to support XC, definitely consider signing up to CoinCall to trade options, spot, or futures. Link is in the description. CoinCall is a fantastic exchange with a beautiful, elegant interface, competitive fees, and it's the one that JJ is using in all of his options videos, as well as featuring on this show when we're actually going over the options chain and looking at some of the positions we'll be covering later. Definitely, again, if you're interested in starting your journey, be it paper trades, which JJ actually talked about yesterday during the AMA, how to actually get started, or if you're looking for something a little bit more sophisticated, check out that options link in the description. And if you got questions about getting started, obviously we had an AMA yesterday. It was a very exciting event. I think we were able to get several people into the room. We had many people that signed up. I'm not sure they were actually able to join. We had some technical issues. However, overall, very successful event. A lot of really great feedback from everyone. So we appreciate everyone who did join that, and excited to have more of those in the future as we continue to build out the schedule for where that's going. So if you're interested in joining those in the future, I suggest you sign up with our CoinCall account. So you have a CoinCall user ID, because I think that will be something that we'll be looking for in the future, as well as you continue to follow us here. So definitely like, subscribe, and be a subscriber and showing up every Tuesday and Thursday. But with that, I want to get into some actual options plays. So JJ, I mean, just break it down simply. Is there a play that's maybe a little bit different from what we've been talking about the last couple of weeks as you're looking at IV right now? Is this a time to be getting into Ethereum options at all? Or is it time to really stay off, as it seems like everyone's rushed in? And this is a classic example of stay away and don't let your fingers get burned.
Yeah, unless you're looking to sell some volatility here, I don't think there's much to be done due to that spike in IV. You don't want to be an options buyer when IV is priced at nearly 200 typically. So if you're holding some ETH long term, you don't mind selling a little bit of upside here into June. I don't dislike some covered call options where you're holding the spot ETH and you see how much these premiums have gone up. So you could sell something like a 4,200 call for $200, and then your break-even price on this would be ETH at trading over 460 or so, for 4,460 by the end of June. So I think that's a good risk reward here, to where if ETH just kind of stagnates or falls backwards, you're going to collect that premium, and that'll be profit. So you could sell, you can figure out how much you want to sell against your ETH holdings, and a capture upside at 4,400 and change through the end of June. But obviously, if price doesn't continue on in this parabolic fashion, you get to collect that premium. If you want to look at some put options to protect yourself, I think probably going out towards June on Ethereum, you could look at anything below 3,500 The 3,500 puts trading for June 7th, currently at $120, and this is going to protect your downside in case this ultimately just reverts and it was nothing more than a giant scam wick. But these put premiums have really dropped off pretty drastically in the recent week or so due to the upside move, right? So you can buy hedge protection here pretty cheap, and I don't think this is a bad time to do it, especially based on the way Dixie's moving this morning. Looks like you want some protection into that event, so if you've been holding your ETH spot or per position unhedged, I think now's the time you want to take that action and ultimately protect yourself, whether that's selling calls or buying puts.
JJ, in your last options video, which was a fantastic video, if people haven't checked it out, I suggest you do. It's all about the actual top of the full cycle, but I think there's lessons that you can take to even when you're seeing these pumps. I feel like right now is exactly when people are starting to look further down, the price, call it the options chain and the price, and like you said, selling vol and not looking at puts. So this is exactly the kind of price action that you would expect when everyone's rushed in, right? That the puts become incredibly cheap, and now is the time to be looking there.
Yeah, this is one of those setups to where you get that massive parabolic move, call, implied premiums go through the roof, and put premiums drop. And that's typically a good time to do what's called a bear risk reversal, to where you sell some upside through calls, and then you take that premium that you collect and you buy yourself some insurance to the downside. And in case this is an overly frothy move that reverses, you're fully protected, right? And it's actually better than actually selling your spot exposure, because it allows you to ultimately accumulate more while holding onto your spot position. As the call premiums go down, you'll collect that. If they expire worthless, put premiums spike again. If we do get a reversion wick, you'll get to collect those premiums on the puts, sell them at a massive profit, and ultimately buy more spot ETH if that's interested in what you're doing.
I really want to have people think about what you just said. There's a lot of questions that came out. One of them in the AMA yesterday was, well, should I be trading alts or should I be looking more at options? What JJ just laid out is exactly why options are so interesting and so effective, in that you can both be hedged for both the upside and the downside and still hold on to your collateral in a way that you can't do if you're just moving in and out of alts from stables or from Ethereum and rotating it down. It's not as if there aren't plays in those directions, but I mean, if you had just been holding some of these calls from prior to the previous week or to Monday, you would have seen a massive price rise and seen some really good profits, right?
Let's look at those, because we did show this during the AMA when that question came up. So let's take a look at this week's 3,300 call, for example. If you could see on my screen here just how massively this went up. I don't know an altcoin that could give you 100x gains in a single day, right? Or even more. So these were trading around $2 on May 20th. And then as of this morning, they were over 650. So that's just a good example. I mean, that's obviously a rare event, but it is possible with options. And I don't know any other instrument or asset to where that kind of thing is possible on a replicatable basis.
Yeah. This is why we talk about options so much on the show, because we really see it as an effective way for sophisticated traders and investors to both grow as well as protect their investments. And so we want all of you to consider it for part of your strategies because we do think it is so effective. So, all right. So that's on the east side. What on the BTC side, where we're talking about chop, we're not really seeing much difference. Is it still the same play you've been talking about for weeks now, which is looking further out in the year?
Yeah, I think it's a bit tricky spot here because I don't have much read on the market. I want to see how ultimately this week closes. So I think today's US session and also tomorrow's we'll kind of get some more insight onto which way the Dixie's going to break. I think right now probably just want to be sitting on your hands. If you're continuing to hold that longer term call position, date it for December. You could sell some weekly volatility here. I think you'll be pretty safe. But I think you just want to wait things out, possibly buy some hedge protection for at least a couple days, because this thing could reverse in pretty short order. So keep an eye on it. If you want to take profit on that position, I don't hate that here too, because we've had such a massive move in recent days. It's never a bad idea to pay yourself a bit.
Yeah, take some profits on the table. Okay. So there's a couple of ways you can play the market from an options perspective. Again, if you're interested in starting that, definitely check out the coin call link that we have in the description. You can start your journey. And if you've got more questions, obviously JJ has all kinds of educational content on the channel. I know a lot of colleagues that have looked at the content, not just me, who's obviously impressed, but others have been very happy with the content. Nothing but rave reviews. So definitely check that out. Benjamin, I want to come back to you. You talked earlier in the show about now is not the time to be looking at leverage, right? If you're going into spot, this is a good time. You mentioned the Hashribbon, the fact that it hasn't really given that buy signal, and you'd be looking for that before you start to move further down the risk curve. So I guess from a positioning standpoint, are you looking more just at accumulating Ethereum, and then perhaps if that gets an impulse move higher beyond what we even predicted or thought was possible, are you looking at other L1s? You continue to look at base. What's on your radar right now?
I would look at two things. I think both have equal odds. One is alternative L1 play. The other is the beta to ETH, which is basically Lido, ENS, and those tokens, probably a bit of DeFi tokens, DeFi 1.0 tokens, catch us some bid. That's what I think has some good odds if indeed this turns bullish and runs.
And for those, I assume, again, you're just looking at spot allocations. You're not actually looking at anything from a leverage standpoint because the risk is too high.
Yeah, leverage, I think the risk is still too high.
Okay. So anything else you'd want to share? Because I know it's sweet, short and sweet, but sometimes that's what you need.
I would still say just because the market feels fishy, don't go on shorting. It's even worse an idea to do that. Because if the doors are opening, the flood doors are opening for funds, and if we are wrong about understanding the impact of this macro behavior from the politics side, and if I'm underestimating this whole deal, right? It is possible I'm underestimating this whole deal. If that is the case, then we rocket up, and you would be having a hefty short position, which is on the wrong side. So it's better either buy some put options to hedge yourself on your spot, or hold spot. And if you're already long, have stop markets in place in profit, so that if it wicks down, you're at least getting out in a safe spot. That's what I'd say.
Okay.
But it's not the place for FOMO.
Yeah, it's not the place for FOMO. Yeah, that will come at a different time. Ride the cycle, give the bull market, or take what the bull market is going to give you. And I think don't get greedy trying to short the market. A lot of people just get burned that way. And as a sophisticated trader that all of you are, who's in the audience right now, you don't need to get burned. You need to preserve your capital for the bigger movements that are going to happen later this bull cycle. And with that, we're going to wrap it up. You got a couple of opportunities you can look at. Be it on the option side, or be it maybe some of these beta plays that Benjamin and JJ have laid out. Guys, I want to thank you both for joining me today, breaking down what could be another historic event as we see the ETH ETF get approved. I want to thank everyone in the audience for showing up every Tuesday and Thursday. Love to have you here. Love the questions and the comments. And we will be back next week, ready to break down what has actually happened this week. So super excited about that. If you're going to do some allocation, this is a good time to do it, but always have some dry powder. Some opportunities are on their way. This is Marconi White signing off.